Hey y'all, it's Jordan. Today we're going to tackle the tax status of NFTs. As NFTs continue to become a way for artists to share their work and for investors to store their wealth, it seems like a good time to make a video on the tax implications of NFTs. For those that are not aware, NFT stands for non-fungible token, and these are digital certificates of ownership built on the blockchain technology. And we're talking about a multi-billion-dollar industry that seems to have come out of nowhere. One of the coolest features of NFTs I have found is the ability for the original artist to earn a percentage of sales for each resale transaction into the future using the blockchain to track the certificate. Because physical art was sold once by the artist for a one-time payment, NFTs is changing the dynamics of art sales and compensating the artist handsomely in some cases. Creating an NFT is not a taxable event. However, if you sell the NFT on a marketplace like OpenSea, then there is a taxable event and you have to pay taxes on the gains received. So creating an NFT is not a taxable event. However, if you go to sell the NFT on a marketplace like Foundation or OpenSea, then there is a taxable event and you have to pay taxes on the gains received. For creators, you would have to report the income received from the different sales and any subsequent royalties from the resales. And you would report the US dollar value at the date of transfer in your gross income. This can also trigger self-employment taxes as well in the case that the crypto was received for services in a business. So any ordinary or necessary expenses incurred can be used to offset your crypto income on the tax return, such as transaction fees. For NFT traders and investors, there are a few scenarios to consider when it comes to purchasing and selling NFTs. If you exchange a cryptocurrency for an NFT, you will trigger a capital gain or loss with the crypto that you parted with. So say you bought your favorite NFT with Ethereum tokens that had appreciated. You would have to report a capital gain for the Ethereum tokens on your return using the fair market value at the date of transferring them for the NFT and the cost basis. The cost basis is the value that the same denomination of coins had when you originally acquired or purchased them. And depending on how long you held those tokens would determine the short-term or long-term capital gains tax treatment. Remember, to be a long-term gain, it has to be held for more than 1 year. The next scenario would be selling one NFT for another NFT. So simply put, it's like if you acquired an NFT in January for $1,700 worth of Ethereum, and then you traded it 6 months later for a different NFT worth $3,500 of Ethereum, then you would have a short-term capital gain of $1,800 that you would report on your return. Selling an NFT in exchange for cryptocurrency is a similar story. Take what you sold it for and subtract what you paid for to get your gain or loss. This goes back to another unpaid pitch for crypto tax tracking software to take the headache out of knowing your basis for all these different coins used in the different transactions. Remember, those tools are things like Token Tax or Coin Tracker. Now let's talk about how NFTs are going to be taxed. The IRS has not taken a formal stance on the tax treatment of NFTs yet, so some assumptions might have to be made in conjunction with your tax advisor as to how these are to be reported. There's a possibility that the NFTs could receive the same tax treatment as cryptocurrency, which is taxed as property. In that case, the more favorable long-term capital gains rates could apply. But the IRS could also go a different route and deem NFTs as collectibles, which would make them taxed at the collectibles tax rate of 28%. Currently, this collectibles tax rate is applied to trading cards, antiques, things like that. This difference would only come into question if the NFTs were held for longer than 1 year. If they're held for less than 1 year, then the ordinary tax rates would apply, and those depend on your income. And remember, 37% is the highest rate right now for the ordinary tax rates. As of the recording of this video, most NFT platforms don't provide 1099s with the cost basis information, so it is on you to track these transactions. If you have any questions, please feel free to leave them in the comments and we will be sure to answer them as soon as possible. Thank you so much for watching, and I'll talk to you again very soon.